Well, we're both. It's a consumer choice. We let people hire a Redfin agent to buy a house, but we also let people buy a house off a website. And it's really the consumer who chooses. That's the way it should be.
So are you seeing more growth in the website, and is that coming at the expense of gross margin?
Well, the demand on our website powers both businesses. So even when you hire a Redfin agent, we use technology to make that agent 3 times more productive. It's why we can charge half the price and still have a good gross margin. And then for customers who don't need representation from an agent, it's almost a purely digital business. That business is much smaller, but it's the one that people are most excited about because in almost every country in the world, people don't pay a buyer's agent. And here, we're giving consumers that choice.
So we've seen a big drop in mortgage rates on the back of Treasury yields in the last few weeks. Glenn, how would you characterize the health right now of buying activity in homes across the country?
Strong and getting stronger. So earlier in the year, the market was a B. We really had a fairly sharp correction in the back half of 2018, but as soon as rates went down, we saw buyers come back. The market was good in the first quarter. It's even better in the second quarter. I'm fairly confident about it. The only issue is that as rates go down, you still have low inventory, and that's going to limit sales. So prices are going to go up. Sales will not be as strong.
Are there any price points or regions that you are concerned about?
Well, I'm concerned about all of them at some level, but I think California is the one where we have to be the most careful. It's just a state where people have been migrating to that state for decades, and now that is reversed. People are leaving. It has got an affordability crisis with a capital A. So that's the market that we watch most carefully just because prices are on a knife's edge. And that's why you see the whole industry so rate sensitive. When rates go down, people flood into the market. When they go up, they immediately pull back because they don't have the money to absorb the hit. And that just means that it's going to be a wild ride in real estate, a very volatile market.
Well, I was going to ask about California and in particular the Bay Area and what you've seen, Glenn, if anything, as a result of all these hot tech IPOs that have paraded onto Wall Street this year and whether there's been an effect on the housing market there.
Well, there certainly has. That market has always been crazy just because you really can't peg it to income. You have to peg it to the stock price of Facebook and Twitter and Google and all the other tech companies in Silicon Valley. And because there have been so many IPOs, we're just seeing an unprecedented number of bidding wars. So 33 offers on a single house last week where we were involved. Almost all of them were all cash, all of them well above the asking price. So it has become intense in San Francisco again. But I do think you have to look at the migration. So there aren't many homes for sale. It's 7 by 7, 49 square miles in San Francisco. There's nowhere for people to go, and some of them are leaving as a result. So I think the short-term trend is bidding wars. The long-term trend, less optimistic.